Johan Maree, Commodities Structuring, ABSA Capital. Johan, thank you very much for your time today. It's quite interesting. We had very good data that came through from China, perhaps showing that the Chinese economy is very much on track to a sustainable recovery. Are you convinced, and is this going to keep commodity prices higher?
Yes, absolutely. Most certainly on the macroeconomic, because one of the things there's been all this buying in the first half of this year on specifically copper, and the concern was, is there real demand behind it, or is it pure stimulus? The data clearly seem to indicate that there is actual activity going on. We had increased copper imports for November on the back of also increased domestic production. So that seems to indicate there's real demand there.
What about reports saying that we're seeing a lot of industrial overcapacity in China? Does that not create some concern?
Well, this doesn't seem to be the case. You would expect that you would either have lots of domestic production or imports, but both, there has to be demand somewhere to use all that metal. And that seems to be the case. And then also the news on they're going to commit further to the stimulus. And that's going to be supportive to, we think, cars and household goods. And on the car side, obviously that filters through to commodities, zinc, aluminium, lead. So from that point of view, most certainly supportive, bullish.
What about all the worries that have emerged from Dubai? Because obviously we know that property sector very key in that region, and obviously the construction sector using some of those key base metals as well.
Well, it has been a concern on the market, and we have seen markets reacting negatively to that. Although I think Dubai is more of a general economic concern. And time will tell how much of that is going to filter through to the rest of the world. But it had an impact on prices. You could see that, going down. Some move away from risky assets. But I think on the global scale, I don't think the concern is there that's going to affect the global market and the commodities.
Oil prices have also been on the decline over the last couple of weeks. It's interesting because we saw it very close to 80, now it's very close to $70 a barrel. And we know there was a lot of speculation involved in that, in pushing the oil price higher towards $80 a barrel. Do you think fundamental factors are playing a bigger role now?
No, we think it's just, again, a move away from risky assets to some extent. And short term, we had stock figures from the US this week come out that, you had an increase in product stocks. So that's, that is bearish for prices, but we think it's short term. We still see $70 as being the sort of floor in the market for two reasons. The one being that is where on the long term we think the market needs prices to be to stimulate new investment. And also just from a current supply demand picture, we don't think it's, the picture have changed. You could see the market trading short term through 70 down. Of course, you could do that, but we think 70 is going to be the floor.
Coal obviously under the spotlight, considering the fact that Eskom is very much reliant on coal for electricity, and electricity tariffs also set to rise. Coal prices have also been doing relatively well. What is your forecast for coal?
Well, coal is very interesting because, whereas the rest of all commodities have over this year traded up quite significantly, coal has not done that as much. The price has recovered over the past few weeks and now has traded down a little bit again. What is interesting in the coal market is the forward prices are much, much higher than the current spot prices. So we currently have lots of coal around. There's lots of stocks around, but as you see economic demand filtering through and those stocks start to be worked through, you're going to see upward push on prices as well.
Platinum hit $1,500 an ounce last week, and obviously much softer this week, really going in tandem with the likes of the gold price also coming under slight pressure. Looking at platinum, we know it's all about industrial demand, but also on the other end, we've got a jewelry demand really coming through from India and from China as well.
Yes, we've seen that. We've seen platinum prices recently being supported both by ETF and the promise of another ETF coming through in the US, and also from investors. And then anticipation of demand that needs to come through. And in the background, there's always the concern about South African industrial action with us being such a, prominent supplier, producer of platinum.
Quickly, gold. Where do you see it going from here? As Wayne McCurry said earlier, today is probably the last real trading day for 2009. Do you think we'll see gold at these levels above $1,100 an ounce until we hit 2010?
I think it's possible. I would expect probably it being range bound for now. We've had this big rise in gold. We had what I think is a very, very healthy profit taking. We're going to have reduced liquidity, and that of course could cause spurious movement in the gold price. But I think going towards the end of the year, we're going to sit somewhere between 1.11 and 1.12.